Let's understand what's happening for our markets and how is it that you should wade through this weakness. Hemang Jani as well joins in on the show right now. Hemang, hi, morning. Just wondering what investors should be doing. Of course, the more short-term players in the market, should they be getting now into capital protection mode? And what about the medium and long-term investors? Are these now finally some good buying prices? And then what do you buy?
Yeah, good morning, Aisha. I think the intensity or the sell-off and the momentum on the way down is extremely high, and it's been going on for an extended period of time. So I think we should let the market stabilize a bit, let the those sell flows also stabilize. Definitely, we all can, attribute this fall to many factors, including earnings and dollar index and all of that. But I do think that given the intensity of the fall, let's say index Nifty has corrected 10%, the broader indices have corrected 12%. If you see within Nifty and broader indices, some stocks have fallen 25, 30% or even more. So I do think it's time to kind of do a little bit of homework in terms of the pockets, sectors, companies which have delivered a good set of numbers, and you could surely make some sort of a plan to deploy money, keeping in mind medium to long term perspective. Of course, short term, it will be difficult to gauge because of the volatility which is there in the market at this point.
You could pause now and just ask yourself that the intent, what happened yesterday? Let's look at FIDI number. It's not bad. I mean, 3,000 crore is almost like a daily routine now. And the FIDI, if it is mapping and matching, yesterday's data was actually lower than 3,000 crore. I'm assuming 22,000 to 2,500 is the new normal, at least in the near future. DI buying, let's look at it. DI buying was much higher. So net, the institutional activity was plus 4,000. In the FNO market, not too many short positions were created by the FNO. So Nuresh, becha kaun? And I'm going to do simple maths here so that people don't get confused. Elementary maths. DI buying 6,100 crore. FI buying, करो भाई subtract कितना होता है? 2500 crore. More than 3,000 crore of plus buying, Nuresh. कौन बेचा?
So yesterday there were two adjustments to be done. There was a PNB housing bull deal which was almost 2,300 crores. As per the bull deals, FI has bought 1,500 crores. The seller was a foreign company which does not get into FPI or DI. So add up that 1,500 crore plus. So that's almost 4,000 crores of selling. And there was Swiggy listing which had 2,000, 2,500 crore of delivery volumes, which could have seen a large part of it being DIs and FIs buyers. So I would say there was closer to 4,000-5,000 crores of FI selling and 4,000-5,000 crores of DI buying.
Net, it is still neutral, Nuresh. Yet markets went down. I mean, my point here is that there is retail or HNI or both or hedge funds where data does not captured. There's a different end of the market which has started selling. That's the point I want to bring out, that folks who were always buying and buying and buying, and they bought when markets fell on election day, they bought when markets fell on budget day, they bought every time bad news has come out. Now they're still selling, even though in last 48 hours the news has not been bad. Nuresh.
So what has happened is we've seen 33 days of non-stop FI selling. So at one point of time now, we've broken down various important price points, and that leads to a little bit of margin selling, a little bit of fear across the board. So in the initial fall, when we paused at 24,000 odd levels, there was not much of a fear. But now we are getting into a fear zone. We are getting oversold. We are getting into price points where we've seen 1.5 to 1.6 lakh crores of FI selling in 33 days, which is, I think, it's a record in terms of a continuous session. So in this case, till the time the flow continues to be weak, it is tough to call the bottom. But once we see a reversal over there, or at least price points, then we can look at it. But it's been a one-way outflow, and it has been continuous without any relief.
Rajesh Palvia, how should one deal with this market? 200 DMA gone. Are markets oversold? Can they remain oversold? Is it a time to go against the tide? Because it's not for the first time we've gone below 200 DMA.
Morning, Nikunj. So Looking at the overall structure, yes, we may remain in oversold trajectory for some more time as the buying intensity is still not that much great to counter the supply of FIs, and the significant sell-off from the FIs are uh, keeping everybody on the caution mode, and nobody is trying to buy. Though the most of the quality stocks are now available at very attractive prices. We are now at almost at 200-day moving average. Again, most of the portfolios are going to restructure, or again we could see some sort of selling pressure if we slip further below the 200-day moving average, because most of the fund managers also follow this 200-day moving average as a entry exit point. So I think that supply can again come in the market if we slip further below 23,500 level. uh, Market structure is oversold. Both the indices, major indices, Bank Nifty are in the oversold trajectory for near-term to short-term perspective. But still, there is no sign of reversal. There is no, sign of reversal from any of the large-cap stocks at this juncture, which could hold the Nifty at current juncture. So I think maybe another couple of days we could see some more supply pressure. This is again very important level to watch for, 200-day moving average, and it's a one-way sell-off in last few weeks. So I think there could be some pullback, but again, maybe we could break 23,500 first, and then maybe Nifty could try to settle down around 23,350 kind of level, and then some pullback we could see from those level, because most of the stop losses are placed at this 23,500 strike price levels, because most of the traders are following this 200-day moving average. So I think, and Bank Nifty is almost now near to 200-day moving average, which is also uh, likely to test that level. So until the Nifty not crosses 23,800 in any kind of pullback, I think the trend is still on the weaker side, and maybe we could slide further to 23,350 level. That level we can see in next couple of days. And for Bank Nifty, I think the 200-day moving average, which is placed at around 49,700. So I think that level can be tested by Bank Nifty also. So I think still there is further more sell-off we could see in the next couple of days.
If you like this video, then like, share and subscribe to ET Now.